Anyone stunned by the huge sum of money Vodafone is making from selling its 45% stake in Verizon Wireless should look at the history of the British mobile phone company. Vodafone's agreement to sell its US interest to Verizon Communications for $130 billion, or £84 billion, is the latest example of colossal deals and big numbers from the Berkshire-based business, which employs 91,000 people. If it completes, the Verizon sale announced in September 2013 will rank third in the list of all-time record corporate transactions. Vodafone already holds the prize for the world's biggest deal. In 2000, it splashed £112 billion in taking over German rival Mannesmann after a bitter battle. Wheeler dealing and number crunching have always been in Vodafone's DNA. The company dates back to the early 1980s when Racal Electronics launched Vodafone after deciding battlefield radio technology could be used commercially. Founders Sir Ernest Harrison and Jerry Wendt could see the way the wind was blowing when, after winning one of the first two cellular network licenses in the UK, they floated some of the business on the stock market in 1988. This valued Racal Telecom, as the fledgling business was called, at £1.2 billion, which was more than Racal Electronics was worth. 3 years later, it split from the parent company and changed its name to Vodafone. Rapid growth followed as Harrison and Wendt exploited the liberalisation of telecom markets and mobile phones became the must-have gadget. By 1997, Vodafone had 4 million customers around the world, but much more was to come after Wendt and Harrison retired and Chris Gent was promoted to chief executive. He proved a tireless deal maker, in 1999 conducting 2 big mergers and acquisitions in the US to create Verizon Wireless, before pouncing on Mannesmann in retaliation for its purchase of UK rival Orange. Controversially, he netted a £10 million bonus for the hostile takeover of Mannesmann. By 2000, Vodafone had 53 million customers across the world and its share price peaked at over 350p, valuing the company at more than £200 billion. From there, it was downhill for the shares as the dot-com bubble burst and it became clear Vodafone had paid way too much for its acquisitions. Gent's successor, Arun Sarin, had to knock £28 billion off the valuation of Vodafone's assets, plunging the company into a £15 billion loss in 2006. He couldn't kick the deal habit either, launching Vodafone into India with a £6 billion acquisition of a controlling stake in Hutchison SR. By contrast, until recently, his successor and current boss, Victoria Kalau, had been relatively quiet on the deal front. Since 2008, he focused on improving returns to shareholders after the previous disappointments. He had tried to sell the stake in Verizon Wireless before, but talks had foundered on price. The funny thing about Verizon Wireless was its low profile among investors. Although one of the biggest and most successful telecom providers in the world, as a private company not listed on the stock market, its real value was hard to discern. Verizon Wireless remained shrouded in mystery even though it paid over £15 billion in dividends to Vodafone over the years. Finally pulling off the sale has changed all that by releasing the enormous value in the company. The deal enables Vodafone to give investors a staggering £54 billion in cash and a special dividend. It is also repaying £13 billion of debts and setting aside a £6 billion war chest for snapping up rivals in its core European markets. Exciting though the deal is, Vodafone's future is uncertain. The rump of the business that remains could attract a predator, or it could be the signal for a new phase of growth. Critics have attacked Vodafone for paying just £3 billion in tax on the Verizon disposal, none of it in the UK. That looks like peanuts to some, and maybe it is, but the fact is the company is simply following the rules, and if the tax bill were any bigger, it might have scuppered a momentous deal that is set to give a much-needed boost to UK pension schemes, all of whom own Vodafone shares and who will benefit from the cash and dividends the company will hand out.